Hi and thanks for joining us here at Framework FX, and today we've got a really great lesson for you. I cheekily named it Why Banks Make Money and You Don't. I'm sure that's not true for all of you, but today we're going to be looking at supply and demand zones. Okay, supply and demand zones are the fundamentals of what moves markets, and so this is a really important lesson for you to learn. If you don't know it already, I'm sure many of you do, but we're going to learn about that today. Before that, if you find anything that you like in this lesson, please consider liking and subscribing it. It really does help at the minute as we're trying to grow the channel. So today I'm not going to cover the real in-depth detail of supply and demand zones. I'm just going to show you how to use them, how to apply them, so you can go away and start looking yourself. Okay, so let's take a look at an example here. So what we're going to say is that we're in the middle of nowhere. Okay, it's very unlikely. We probably already have our supply and demand areas drawn out, but what we're going to say is that what we're looking for right now, we're in the middle of nowhere. Okay, so I'm currently on a 5-minute time frame on the pound dollar. Now, it's important to say that this strategy will work on any time frame. Okay, that is important to say. It'll work on any market, any time frame. These are the basic fundamentals of what moves markets, okay, supply and demand areas. So what we need to do first is we need to find where our supply and demand area is. So what we're looking for when we do that is we're looking for a drive into an area, okay, and then a reversal. So let's take a look at this. Okay, so we've got a nice drive. Again, we'd likely already be looking at things from previously, but for now we'll just take a look at this. Okay, so that's a nice strong drive. Now we're looking for a reversal. Okay, it could be this. Let's see what comes next. Bit of a push back up. Okay, so maybe not. Let's see if this works out. Right, okay, so that's what we're looking for when we say we're looking for a reversal. So we've had a drive up. We've clearly found an area here where we've gone sideways, or we could call it basing. And then we've got a push down where there has been an imbalance in the supply and demand, which has moved the market. Okay, so then the first thing we do is we add two lines to the chart, and these are, so we'd find the highest point, which is about there. The previous move, you could say it was up there, but we're going to say it's here. And this will be called your distal line. Okay, the distal line in your supply and demand zones is the furthest line away from current price. Okay, and then the second line we add is the base of this just before it turns, which is about there, and this will be your proximal line. Okay, so that's what it's looking like now. Now we have our zone. Okay, so we can add that in. Something around there, so maybe make this a little bit bigger. Okay, and that's not what we want to do. We'll call this our supply zone. Okay, so that's what we're looking at right now. Now, I'm not interested in selling this market anymore until we find this supply zone, okay? Because that is where I would consider getting the best price, and that is what trading is all about. It's all about getting the best price you can for the trade, okay? And this is the big difference, guys, between institutions and professional traders and retail traders, okay? A retail trader will see this move over here and they will panic, okay? They'll probably be getting in somewhere around here. They'll have no plan. They'll have no idea, where do I put my stops? Do I put my stops up here, around there? They won't know, okay? And then if the market moves back against them, like it has there, they'll panic. They'll probably panic, maybe pull the money, and you know, it's just not good. And this is what we don't want to be doing, okay? And this is the difference between retail traders and professional traders, okay? They're looking at the supply zone. They're happy to sit out, not interested. I don't want to pay more than I need to get involved in this trade, okay? So until it comes back and we find this zone, I'm completely staying out of this trade, okay? So we do get a bit of a push down, and you know, if we were looking, and we will look at an example in a minute where we'll look for double-sided zones to create perimeters, but let's see if this pushes back up here and gets a touch. So as it comes back up here, I would now be looking to set a sell limit, okay, and I'll set it right on this proximal line, and that's important. And then my stop will go above this distal line and give it a bit of breathing room, and I like to have 2.5 to 3 risk reward, so I'll put that down there. Now again, big difference between a professional and a retail trader is this: I want to be getting out of this trade the minute that I know that I'm wrong. And for me, the minute I know I'm wrong is when we push through this distal line, okay, and it tags me out up there. If I'm wrong, get me out of this trade. I'm not interested. I don't want to be in it. I definitely don't want to be sitting on it and hoping and praying that it comes back. Okay, so let's look for this to see if we get a tag on this supply zone. Not yet. Okay, there, so it's the tiniest of touches, but we've got one there. And we do push into a bit of drawdown, but this looks to be holding. And there we go, there's a nice rejection. So the thing about it is that we know that there was previously an imbalance here, so there's likely a lot of orders that weren't filled when we got this big push over here, and that's probably what we've just found now. We're finding that imbalance again. Let's see, and there we go. Okay, so we've pushed clean through our profit target, and you know, that's in the space of, like I said, you can use it on any time frame. But in the 5 minutes that I was using it on, we tagged in there, so at 2:30, and we're out there. So in 20 minutes, you know, we've achieved 3R in a trade. Okay, so they're not all that simple. That looks very easy. It's not always that simple, but that is the crux of it. That is the crux of how markets often move. And if we go across now, we'll take a look at a better example of, and we'll look at how we would realistically run this and trade it in a live market, okay? Just before we take a look at that example, I just want to let you know that we at Framework FX run a copy trading service. So you may not be interested whatsoever. It may be of interest to you, but either way, if you can go across and visit us at frameworkfx.com, that would be really great. Thank you. Okay, so let's take a look at an example. We'll run through. I'll trade it as I would on a normal day, and we'll just see what we're looking at here. So we're on the pound dollar, the 5 minute chart. As I said, you can use it on any time frame, and if you're going to go away and back test this, which I strongly suggest you do, I would say maybe look at the hour or something a bit longer. It's just a bit more clear to see the supply and demand areas, but for sure it works great on the 5 minute, and I'm going to show you now what I would be looking at. Okay, so I just picked it on the chart, and we're going to take a look now. So we're clearly not really moving here, we're basing a little bit, so let's run it through and see what we can find. It's also just about to turn 6 AM UK time, so markets aren't open for another hour. We might start seeing slightly bigger moves. Okay, so 7 o'clock, they're starting to see bigger moves. Okay, so as we've sort of ranged here, I want to see a bit more than just this. I won't be quite, so we've got a bit more of a push out, bit of a pullback, strong pullback into that area. Okay, now we're looking to push out. Still want to see a bit more of a move before I choose, before I choose an area here. Okay, so I would say now we've pushed away. We've left this area of imbalance between supply and demand. So I would be happy to look back here. So now we look back. We look where that push has come from, and it's come from around here. Okay, so what we want to do is we want to add in our lines. Okay, so we're looking at the big first power move there. So we'd be putting our distal line there, so let's just chuck that in there, because the distal line is the furthest from current price, and then we want to be putting in our proximal line, which will be there, the close just before that strong push, and let's just put that there. Okay, so that's now our area, and we can fill that in, and we can call it so this will be our demand because we're below price. So this is our demand zone. Okay, let's stretch that out. So that's where we're looking. So now that price has moved away, I am not interested in doing anything right now, to be honest with you, because I'm not sure where we're going to find a supply zone. Okay, but I'm certainly not looking to buy into this market until we're back down here. Okay, so what I'm thinking now, I'm looking for this to turn somewhere, and then we can call that our supply zone, and then we've got a lovely supply and demand zone, and we can see where a lot of our buyers and sellers are in the market. Okay, so that's not enough of a push because we've come down and we've shot straight back through it. We want to see something a little bit more aggressive, maybe like that. Let's see if this keeps pushing down. Yeah, okay, so I'm now looking at that and thinking this has reached this point, we've got wicks, and now we've pushed down. So there's clearly been an imbalance as we've based there. So we've pushed up, we've based here, and then we've pushed back down again. So I'm now looking to do the same thing again. So let's add in our proximal line. So just before this push here, we're looking at around and about, around about here for our proximal line. Sorry, 1 second. There we go. Yeah. And then we're looking for where that high is. You could probably go up here really, but as this is the spike on the candle that we're using for that, I'm likely going to put that there. Okay, so you're just looking for areas that you can really work with. And so let's fill that out a little bit. And that's not what we want. We want this. Okay, so this is going to be now our supply zone. Okay, so so this is now what I am looking at on my charts. Okay, this is what I'm interested in. Price has pulled away from that level. It's pushed away from here, and now I'm not interested in anything in this zone. Okay, I'm not going to be taking a trade. Okay, so a retail trader might have seen this push that, oh God, we've got to get in here. But where do you put your stops? Where do you put your take profit? You just don't know. Okay, there's no reason to be involved here. And institutions or professional traders, they're happy just to sit and wait for price to come to them. And price come to them are these two zones. Okay, so what we're looking for now is looking for either a pullback, a touch, and then a go, or a drop down, a touch, and a go. Okay, and I'm happy to take trades from either of them. So let's run this through and see where we get with it. So we're coming down. So right now, just in case it does touch, I would have a buy limit set here, right on this line here, right on my proximal line. Okay, and let's see if we get a touch. No, we push back up. So same again, I would have a sell limit here on the proximal line, stops above here. See if we get a touch. And those can just stay there. So we haven't quite touched there, so we're not interested. Okay, we're not getting involved. We don't need to be involved. That looks, again, you could have seen that. Even if you were playing this game, you could have seen that, and you could have thought, oh no, I've missed it, and jump in here. But you're just gambling then, okay? And we don't want to be gamblers. That's not what we're about. Okay, so we've got a touch here. So I am now in this trade, in a short trade here. So we've got that touch. We're banging on price. Our stop will go just above our distal line, give us a bit of breathing space, and then we want, let's say, a 3-to-1 risk reward, so somewhere around there. Okay, so we're in this trade, and this looks nice. Okay, so we've clearly touched that. Clearly the unfilled orders from before have been executed, and we've got a nice push off. And let's see if we can, yeah, and there we go. So nice and easy there, and that's an easy 3-to-1. Again, we're on a 5 minutes, so that's 3:50 into 4 p.m. So that's 25 minutes, and that's a 3-to-1 trade. Okay, and then we just carry on. I wouldn't normally now, and this is personal preference. A lot of people might be different, but I wouldn't be relying on this supply zone again if it comes back to visit. It might work, it might hold, and I'm sure it probably would. But we've come back, we've touched it, we've filled a lot of them unfilled orders from before, and now. It just wouldn't be as secure. So let's see if we can get a touch of this demand zone. Here we go, let's see, seems to be pushing back up. Let's just run it through. No, it doesn't look like we're going to get a touch. Let's extend these out. Okay, so just this holds, okay? We're just not interested in getting involved in any of this. Anything in this middle bit, we're just not interested, okay? We don't need to be there. It's of no use to us. Keep running it through. Let's see if we get a touch here. Nope. So again, like, look at that. We're just not interested in that, okay? Price hasn't got to where we want to be. We don't need to be chasing price, okay? There we go, okay. So finally, we come down here. I'd have had, as I said before, I'd have had my buy limit in here. Stop would have been just below. Again, to give it a bit of breathing room, and we're looking for 3 to 1 up here somewhere. And already you can see how this has worked so well. We've come down, we've got that touch. Look, it's bounced off there, you know, and again, we could have been panicking. We could, oh no, we'll get in here, and you haven't got the best price. You've just got to sit and wait for price to come and meet your requirements. Okay, we've got that touch now, and there we go. So at the top of that, we've come up here, we've clipped us out for another 3, and that, you know, people like to call it sniper entry, but that's what this is about, you know. These are unfilled orders left from the demand zone, and right there in, you know, in the space of a day, just using 2 trades, that's 6R we've made there in 2 trades with a touch up here and a touch down here, and that's as simple as it works. And then we'll just go back and we'll just keep looking. We'll keep looking for our supply and demand zones. But yeah, that's how it works, guys. It really is. It's not simple. It certainly does take a lot of looking for. But this is how the market moves, okay? This is what professionals and institutions are using, what they're looking for. It doesn't come easy. It does take a bit of practice, a bit of looking for it. But I promise you, this is what they're doing. This is how they're making money. And because a lot of retail traders are sitting in here as a bit of cannon fodder, that's why a lot of retail traders are losing money, okay? So go away, backtest it for yourself, get your charts up, just go through it, okay? It's no pressure. Just train your eye to see where you get sharp moves away, or you might get a drive in, a base, and then a sharp move away, and then just practice drawing those lines, and then just watch price return to those lines again, and yeah, this is all about training your eye. It's not easy, but I promise you can get the hang of it if you just pull your charts up, and you just watch price, and the more you watch it, the more you will see how these supply zones and demand zones form, and how you can utilize it best to make as much profit as possible, because that's what we're in the game for. But yeah, this is what the institutions are doing, this is what the banks are doing, so this is what you should be doing too. So last thing to say is thank you for joining us at Framework FX. Again, if you found this useful at all, please consider liking and subscribing. We also run a Telegram group, which is free. I'll leave the link in the description for that. And lastly, as already mentioned, jump across to frameworkfx.com, take a look at that. That would be a massive help. So yeah, go away, try that out, and comment if you have any questions, and happy trading.